Good day, ladies and gentlemen, and welcome to the Q2 and H1 FY23 earnings conference call of HPL Electric and Power Limited, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Kapadia from Elara Securities Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Michelle. Good afternoon, everyone. On behalf of Elara Securities, we welcome you all to the Q2 FY23 and H1 FY23 conference call of HPL Electric and Power Limited. I take this opportunity to welcome the management of HPL Electric and Power, represented by Mr. Gautam Seth, Joint Managing Director and CFO. We will begin the call with a brief overview by Gautam sir, post which we'll start the Q&A session. I'll now hand the call over to Gautam sir for his opening remark. Over to you, sir.
Yeah, thank you, Harshit. Good afternoon, everyone, and thank you for joining us at the HPL Electric and Power earnings call to discuss the financial and operating performance for Q2 and H1 FY23. At the outset, I hope you and your families are fine. On the financial front, for both Q2 and H1 have been fairly good for the company, backed by long-term growth drivers and the festive season buying spree and business velocity. I'm pleased to inform that the company registered a year-on-year strong growth, with revenue surging handsomely at 46.3% in the first half to 597.9 crores compared to 408 in the previous year. In terms of the quarterly comparisons, our revenue increased by 8% in Q2 FY23 to 302 crores. Most notably, our EBITDA grew by 79% year-on-year in the first half to reach rupees 75.5 crores. The EBITDA margin expanded by 231 basis points and stood at 12.6%. Our PAT stood at 12.6 crores in the first half compared to the net loss of 15 crores in the previous year, mainly due to the COVID lockdown. Both our metering and systems and our consumer and industrial segments delivered a strong performance in the current quarter. The growth prospects of the metering and systems seem very bright in the coming years and looks to be promising for this business segment. The entire metering business is evolving, and we expect to see a substantial upside in the segment in the foreseeable future. Our consumer and industrial business segment is also performing well, and we expect this to continue in line with India's strong growth engine. This latent strength in demand is being borne out by the tangible increased inquiries we are receiving and the day-to-day billing traction we are getting from both the business segments. In terms of our capabilities, the company is fully geared to cater to the available growth opportunity in both segments. HPL has adopted world-class technologies, invests significantly in R&D programs, enjoys a diversified product portfolio, and has a sizable manufacturing capacity. With all these advantages in place, we are optimistic about converting business growth to value creation and steadily gaining market share. A key feature of HPL Electric is that we are continually evolving with new age technology for the future. Our smart meters are a prime example of adopting new technologies that are driving the future, and as you know, HPL is very well placed in this space. There is greater attention to T&D loss reduction and time of day energy use for demand side, where smart meters play a significant role. Various state governments are rolling out significant investment plans for developing smart cities, and HPL is actively taking part and contributing to such projects. Recently, for example, I'm pleased to inform that we are already undertaking 2 smart city lighting projects. As you know, we have a well-diversified portfolio of electrical equipments catering to various market segments. To bolster this further, we plan to introduce several new products within the consumer segment. We will keep you posted on these developments as and when they occur through our various news releases and direct communications. We are highly optimistic about our long-term prospects, generally improving consumer sentiments, the steady migration to EVs, a maturing DISCOM environment for smart meters, and the ongoing 5G infrastructure push. These are just some of the drivers that underscore our confidence in harboring a positive outlook for our business. On this note, I request the operator to open the floor for Q&A. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask a question. We have the first question from the line of Sagar Shah, an individual investor. Please go ahead.
Yeah. So congratulations, sir, and thanks for the opportunity. We have recently received an empanelment certificate. Can you please share how many tenders we have received post getting the implement certificate?
Yeah, thank you, Mr. Shah. The government is going about the smart metering and under their DB foot policy, and also the metering which happens under the RDSS scheme, which is the revamped distribution sector scheme. Under that, the empanelment is a must for anybody taking on the system integration. So as a company, we are one of the few companies through the process have got empanelment and for the as a AMI SP, where we are capable of executing the projects of the smart meters. So now this is a process which is still going on. I think there are about 20 to 25 companies which are already approved as the AMI SPs, and these are fairly big and very large companies which have come into this field. Now coming to your question, although the process is still going on for certain few companies getting the empanelment, the tenders have already started. So the current inquiry bank under this new scheme is also fairly large, but overall, if you see the meter inquiry banks are well over 10,000 crores, and I repeat, it's over 10,000 crores. So for the first time, we are seeing the overall inquiry base really increase, and some orders I think have already started coming in. We have received few smaller orders, but the larger orders, I would say, because they would involve much bigger planning, much more, the evaluations would be fairly much more elaborate, that maybe from the next quarter or the first quarter in the next year, that is the time when we find or we should see the maximum number of orders getting finalized. But every week practically we can say that new tenders are coming out. The good thing is that the government came out with something which is equivalent to the standard bidding model, like the standard bidding document. I think that was given out earlier. There was a lot of public discussion, and all the stakeholders involved were well consulted and discussed. So the guidelines which have come out in the DB foot are practically being followed by different states. So what we are likely to see is a big rush of inquiries which has already started. There would be, since they are all following the standard bidding documents and the guidelines by the government, they would be fairly much more consistent. So for us to have a strategy in place for quoting, or even in terms of the pricing or the cost involved and the interest cost, whatever, that becomes pretty much standardized. And I think out of our experience, all the people will learn from that. So the process has started. Certain orders have come in, but I think the next quarter and the quarter after that is definitely going to see a very, very large orders getting finalized. And with us having a dual advantage of being a approved, empaneled AMI SP, plus being a very large supplier of smart meters, we definitely have two big opportunities within the smart meter segment.
Okay, that was a beautiful insight. My next question is, sir, can you throw some light on the long-term targets of the company, like in terms of profitability, growth, or market share?
Yeah, as HPL Electric, we are into two segments. One is the metering and systems, which is mainly the smart meters going forward, plus the related projects which are involved with that. And the other is the consumer and industrial, which normally comprises of our sales through our dealers and distributors, which is mainly the B2C channel. Now, in a long term, if you look at I would definitely see a very positive outlook for both of them. Like we just briefly discussed about the smart meters in my last in your first question. If you look at the smart meter segment, I'll elaborate on both the opportunities individually, and then I'll spell out a long-term plan. The opportunities are pretty large. The smart meter is seeing some kind of a change. The whole metering industry is seeing a change which probably has not been seen in the last maybe 20-25 years. The industry size is set to grow. The sheer quantum of business which is ready to flow out is very enormous. In terms of even getting the policy in place, even the move by the government to have the empanelment is, I would say, a very good decision, because that gives a very the participants are well chosen in a way that they are large companies, they are serious companies who will be out to really implement it. So overall, the ecosystem will be good, and that will be very healthy for everybody, including the consumers. So that is, of course, a very well defined opportunity which is led by the government, and the government has been defining the targets. The whole thing is going to be defined by them. On the other side, we see the consumer sentiments, the overall consumer markets are picking up post the two lockdowns, what we have seen. And even in our company as HPL Electric, in the last 2 years, in fact, in 8 quarters, we have seen a good growth overall. And in the first half of this year, we have again seen a 28% growth. So going forward, we see ourselves much more stronger in the consumer electrical segment. We see newer product, new verticals coming out within the segments. Our reach has been increasing quarter on quarter. We see that to be fairly widespread. In terms of retail points, we have already said that the company expects in the next 2 years to have over 100,000 retail points. So a lot of work has been going on in terms of brand, in terms of building the product portfolio, which is fairly diverse. But being more consumer centric, it still has to be changed, because the choices are changing, the technologies are changing. So the consumer definitely expects every season something new coming out. Our lighting is definitely a front runner in leading the consumer business, but we have also seen the wires, the switchgear and other related segments also really performing pretty well. The good thing is that the growth what we have seen is pretty consistent. It is even going forward in the next 2 to 3 years, we do see a consistent growth coming in. Now, on a long-term basis, these two segments are set to grow much bigger going forward. Plus, as HPL, we are always transforming ourselves based on the way the country is transforming. So, in today's time, if you look at all the new age technologies in terms of smart meters, we are there. We are very well placed in that. But even if you look at the smart city opportunities which came in, right from our switch gears going, or even the smart street lighting systems, which we have done earlier in 2 cities, in Bhopal and Jalandhar, which were already handed over to the government. And currently we are doing 2 more, which are under process. Also, the other opportunities of 5G, which is coming in a big way. HPL has been a good strategic supplier to one of the leading telecom players in the 4G segment. So now, as the 5G is coming in, we definitely see a big opportunity going forward in some of our product lines in 5G. In EV segment, right from the charging infrastructure or the moving vehicles, there again the company sees a good opportunity. In renewable energy, right from having in the solar complete product portfolio what we have. So all the new age technologies which are coming in and the way the country is transforming, HPL, thanks to its R&D and the focus what we have on the product development and the changes what we need to make, we are fairly, I think, well placed on that. And that will drive the technology, the preparedness and infrastructure what we have, and the manpower what we carry is going to define the long-term execution and reaching to the targets. And as a company, if you look at the next 3 years, 5 years, even longer than that, definitely we see a very, very good growth coming in and improvement in our market share for sure, and also improvement on the margins. That is where we see the company move forward.
Okay, thank you. And so our last question is, like, are we planning any big capex plans in the coming years?
No, not exactly. We have, if you see all the opportunities what I just talked about, most of our capex is already in place. However, there is some maintenance capex which normally happens more because of the tools and dies what the company, which is more, wherever they get worn out based on use. So I think the maintenance capex of about 30 crores or what happens, that would continue. But overall, in terms of our all the opportunities and the various business segments what we have, we still have a good capacity which we need to increase. And in fact, the capacity utilization last 2 quarters, especially on the meters, have gone up, but still we have a large capacity to fill up. And we are definitely poised to take the advantage the market is currently offering us. Yeah. So no major capex right now. Yeah. Yeah. Thank you, Mr. Shah.
Okay, thank you, sir.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1 now. We have the next question from the line of Neha Sharma, an individual investor. Please go ahead.
Hello. Good evening. Thanks for the opportunity, sir. I have a couple of questions. Can you throw some light on this festival season sale and which segment received better attraction in this festival season?
Yeah, when you look at the festive season, mainly, although only lighting is one segment which is more, which sees a more upside based on the festival. That is the Diwali season what comes in. Normally the other products, be it metering or switch gears, solar, wire and cable, they are all based on the, they're fairly well spread out in all the quarters. Although the Q4 definitely sees a much big uptick in the trade demand as well as the spending by the government on the infrastructure, because they have deadlines of closure of the budgets and other things. But when you look at the lighting, definitely the second quarter does see, especially the August, September and October, these are the time when we see a uptick in the growth on the lighting. And this year also we have seen certain good growths happening in, especially in the lighting front during this festive season.
Okay, so one more. We know that the smart meter and the metering segment are on the boom and a growth driver for the company also. But can you share the ranking of other products which will be driving the growth for the company in the coming quarters?
Yeah, in fact, I did discuss some opportunities in my previous answers, but I'll just highlight that, we did discuss that smart meter is, of course, going to be very big in the medium and the long-term range, because the government's entire metering and, in fact, the broader power sector reforms, what the government is looking through RDSS scheme, is going to be driven, and the efficiency is going to come in through the implementation of smart meters. So definitely that comes in a big forefront by the government. And also there are specific budgets which the government is allocating for the smart meters. So that is going to be, of course, a very big growth driver for us. then there are certain opportunities which are coming in a big way, which the company is looking at. And then I'll come to the then on the product, what this is. 5G is, the 5G implementation is happening in a big way. We have recently, in fact, many of the people may not know, but towards the last part of the 4G implementation, the company did a good substantial business to supplying to one of the biggest telecom player, and this included certain switchgears and cables, but mainly the cables. And this time, when we are seeing the 5G implementation start off, I think 1st October was the launch date when the Honorable Prime Minister did the launching. Now we are seeing good inquiries are coming. We are already approved with both the top 2 telecom players, all the 3 to 4 main contractors who are going to carry out the complete implementation. Our various products are already approved. We got our switchgear approval in one of them. So a lot of work which has been happening since the last 1 year, that work has already happening. Of course, as we go forward in this quarter and next quarter, that is when we see the orders to be coming out. And as and when the orders are getting finalized and they're coming out, and I'm sure at suitable times we will be informing the markets on that and the larger opportunity, because then it will become much more definable. But that is one place where the company has been working, and now we are on the verge of seeing certain uptick in that. There are also, we talked on the EV infrastructure. The EV charging infrastructure is also coming in a big way through institutionalized or private consumers who are installing it. So that is where, again, the use of electrical products becomes relevant, whether they are on the AC or DC or whatever specifications they may have. So the company is again poised to take certain good growth coming in. We have already seen certain the demands pick up through various panel builders or system integrators. Even on the moving vehicles, right now we have 3 two-wheeler companies where we are supplying on their moving stocks. So their vehicle have our breakers in them for the circuit protection. So there are a lot of new things are coming out in the market, and we are also adapting ourselves and trying to locate and adjust ourselves into that. But even similarly in solar, we have seen a good growth happening. The other smart cities, as I already discussed. So the companies, these are all new opportunities which are going to drive the future growth apart from the smart meters. Also the switchgears is going to play a major role. If you recall, switchgear probably, if you look at an individual category, they have probably one of the best margin, the EBIT margins traditionally, and we are very well placed into that with a very strong infrastructure. So overall, I think it's not only that the smart meters are going to drive it, the other products in our consumer and industrial segment, they are also going to drive it. And apart from that, when we have a strong channel strategy, also we are building up the brand in a consistent way. So that is where the overall the opportunity would fructify, and we definitely hope to see good results on the board here.
Okay, so one last question. So what is the working capital to run a B2C business, and what is the ideal working capital cycle? Please throw some light on that.
If you look at the working capital cycle, we traditionally have 2 businesses. One of them, especially the metering, where the supplies are to utility, there the working capital is high. The nature of business has been like this, where the debtors are from the utility are definitely on a higher side. Typically 6 months is the average debtor period what we have. In terms of the inventories also, the process of getting pre-dispatch inspections, also ensuring that the price volatility is not there. So definitely the critical items or even the warranty stocks are well stocked up. So the nature of business is that in the B2B segment, where the working capital cycles are generally high, and the debtors are out of our control because they come from the government. But On the other front, definitely there are certain actions which we have continuously taking to ensure that at least they are in the limits, or that's how we look at it. But when you look at the B2C business, this has a fairly better working capital cycle. The company has been working on reducing the debtor days, mainly by implementation of channel financing, but and also having a better fiscal discipline. So I think fairly we have been able to bring it down. The channel financing implementation has also been much better. In fact, as an internal target up to March 2023, we do hope to see certain much more better improvements going forward, and I think the teams are working on that line. So overall, as a company, both these segments have a different approaches on the management of the working capital, but overall we have been able to bring it down this time, right from inventory and the overall working capital. So we have got it down in the first 6 months, and hopefully the way we do see a growth in our revenues in the second half of the year as well, and the target is obviously very clear, that to again bring down the net working capital and the inventory days further by the time we reach March 2023. Yeah.
Okay, that's it from my side. All the best. So thank you.
Yep. Thank you, Neha. Thank you.
Thank you. We have the next question from the line of Anmol from RJ Consultant. Please go ahead.
Yeah, thank you. So by when can we see visible traction in the metering segment? How are you mitigating the global supply related chip shortages?
If you see our last 2 quarters, in fact, the metering business has seen a 68% growth in the first half, and starting from I think the second half of the first quarter and going into the second quarter, we have definitely seen a good execution of the orders. And despite having a good execution especially in the second quarter, we still have over 500 crores of orders in the metering business. So overall, I think the execution is already getting to be much more smoother and stronger. And going forward also in the next half, we definitely expect the same momentum as in the Q2 to continue and even probably improve thereon. Now, if you see, since last 2 years, the global shortage of the chips and the ICs and others have been affecting, but now I think we are well past that. So although there could be some challenges which may remain on certain models or some areas, but overall the position is much better today in terms of the supply of the global, or in fact in our procurement of the chips. So I don't think that is now affecting our execution in any manner in the near future. The overall the growth of the industry is definitely going to be very enormous, so that may in future pose certain problems. But overall, if you see the position, be it any kind of geopolitical scenario what is existing today, either in Europe or in maybe China or anywhere, I don't think the global supply chain is affecting us so much as it was doing maybe a year or 2 years back. So we are well past that, and I think with the orders expected and the execution which is happening, definitely we are set for certain good, at least a good second half in the current year. Yeah.
Okay, sir. And so my next question is, did the company take any price hike for any product to meet the rising raw material prices?
No, you mean in the second quarter or in the past?
No, yeah, in the second quarter, maybe this half year of financial year 23.
Yeah, so more specifically, because if I recall, I think in the second quarter there has been no price hike as such, because we have seen, in fact, in the last 2 years, there has been multiple time price hike, especially in switchgears. We have seen at least 3 major price rises happening. In terms of wire and cable, we have seen many more price rise happening. In some months, almost practically every month, we have seen the price increase happening. If you see in the second quarter, In fact, there has been certain reduction in the price of wire and cable. I think maybe twice, I think it might have gone down, but no price hike as on now. Maybe in the beginning of the first quarter, I think we had a price increase for switch gears. But what one needs to understand is that if you see the consumer electrical business, the flexibility of passing on the prices with a time lag is definitely there. And I think as a company, we are exercising that, and the prices are getting passed on either ways here. So generally it's been an increase that has been happening, which has been passed on. But since last 4 months, the prices have been fairly stable, or a lot of commodity prices have in fact come down, or they have cooled off. So that is somewhere we are till September end. We've definitely seen certain prices coming down. In fact, just to recall, today morning, because the prices of copper last week have gone up. So I think today morning we have come out with a small price increase, which would be effective next week. But that's mainly in the wire and cable only, yeah. But I think the flexibility the market is providing, and we are using that, yeah.
Okay, sir. And so my very last question, what is the main reason for the momentum we gain in the metering segment, and is it going to sustain in the coming quarters? And what differentiates HPL from its competitors?
Yeah, regarding the momentum, because the metering and the smart metering is basically it comes under the purview of the government. So mainly the momentum, what you see in the last 1 year and then the next 5 to 7 years, the moment what we see is going to come in mainly from the government policy of changing all the meters, all the 25 crore meters into the prepaid smart meters. And I think that vision and the policy what the government has put in, that is basically driving the growth. And this growth is, of course, it is implemented through the DB foot guidelines what they have given and the RDSS scheme. So that is how the implementation is happening, and thereafter all the movement and the demand coming from the various state or the central utilities, and subsequently the demands coming in through the AMI SPs is all as a result to that. So normally if you have seen the steady growth in the meter industry over the years, this is the first time where we are seeing the current working meters being replaced by the smart meters. So therefore the demand is going to be enormous here. So that is where the momentum is coming from. Now, in terms of, I think you asked about the competition. I think, can you repeat the second part of the question, please?
Yeah, what it differentiate HPL from the competitors?
Yeah. So if you see, there are about 3 to 4 players whom we would take as a serious competition in the market, with the demand being very huge. So in terms of our focus, our investments into the R&D, in terms of the manpower, the design, development, the infrastructure which we have also put in, and the readiness to exploit the opportunity, I think this is something which we have really invested into that, and that sets us apart. Now, it could be the competitors are also doing that, so I cannot just comment on that, but definitely from our side, we have done the preemptive actions have been taken on a timely basis, and whether it's on certification, meeting the standards, I think everything probably we have it already in place to exploit that. So as we go forward, we in the traditional meters, in the electronic meters, we have been enjoying a 20 to 22% market share across many years, and I think going forward in this, definitely we hope to have a much larger share, maybe at least a 25% market share in the smart meter segment that would come by. And as I said earlier, the opportunities will come in 2 ways. One, the main part will always be that HPL Electric being a big supplier to all the AMI SPs, and that's where the major part of the growth is going to come from. The other being, taking up projects under AMI SPs, but that would happen very selectively, if ever that would happen, But majorly, as HPL Electric, we are focused on our core competence of smart meters, and the demands have already started coming in, and that's how we would see the near-term growth. Yeah.
Okay, sir. Thank you. Thank you very much.
Thank you.
Thank you. We have the next question from the line of Sandeep Bed, an individual investor. Please go ahead.
Thank you and good afternoon.
Yeah, good afternoon.
My first question is, how many manufacturers of smart meters are there in India today?
No, there could be a couple of them. I think probably I won't have the complete information, but there could be about maybe 7, 8 of them. But mainly, I would say the market till some time was concentrated with about 3 to 4 people. But if you look at it traditionally, 10, 15 years back, there were 40, 50 manufacturers. And over a period, the way the technology changed and has improved, we have seen lesser players. But there are definitely 3 to 4 serious players on the smart metering side. There could be many more which have come in who are likely to participate. But probably you can get them from the government websites, I'm sure, yeah.
Right. And you said that there are many more who can come in, but how long will it take for them to set up the facility for a smart meter? And
no, it's very long. In terms of meeting the pre-qualification standards, in terms of getting the certifications, getting the factory approvals, it's a very long time, I would say. And the business it comes based on the pre-qualification, which is actually cumulative. So in terms of, I think you got it right, it's going to take a lot of time for anybody actually to come in and set up a manufacturing unit. So it's a long time, I'd say. Yeah.
Right. Second, sir, I wanted to understand whether the capacity that we have for traditional electronic meters, and now that we are going to make more of smart meters than electronic meters, are the capacities fungible, or these capacities are, cannot be interchangeable, cannot be interused?
So the capacities are well interchangeable because ultimately when we talk on the smart meters, we are talking about what goes into the design, what goes into the ICs, what goes into the electronics. So definitely the current capacity what the company has been having all throughout for the electronic meters, that is easily changeable, or it's already changed to smart meters. In fact, now we are also working on automating a lot of the smart meter line, and I think it's already underway. A lot of processes have happened, but let's say in the next couple of months we will probably have much more automated and world-class assembly lines and testing lines for the smart meters. So the current capacity gets utilized, but you have to realize that in terms of when you look at the value and the sales potential, the per unit cost of smart meter with all the infrastructure is much higher than a traditional meter. So for the same amount of sales, actually a lesser volume needs to be done, of smart meters, but the value adds are very high per meter. Yeah.
Right. Third, sir, you mentioned that your focus will be more on supply of smart meters rather than taking up the turnkey projects. And if you are going to supply smart meters to people who are going to win the tenders, how will that impact your working capital? How will it impact your receivable cycle going forward?
No, yes, you're right. If you look at the major opportunity, if you look at the opportunities of the AMI SPs who are going to be the system integrators and who are going to do the state-wise implementation, the order values, of course, are going to be very high, ranging from 500 crores to even going up to 2,000, 3,000 crores, even higher than that. So the orders are going to be much larger, but all these AMI SPs will need one or two, and I think the government has mandated it is minimum 2 smart meter manufacturers, to give them. So definitely the bigger opportunity for us is going to be the supplies of the smart meters, and that is where we will be focusing. In fact, with the utilities, when traditionally they have been buying, the debtor days are typically around 5 months or 6 months, but I think under the new scenario, we will see that to improve, because right now there is going to be, between us and the utility, there is going to be a private AMI SP who will be typically a very large private company, and with good financials and others. So maybe there is a very strong possibility that in the supply side, in this type of opportunity, we may see a drastic improvement in the working capital cycle, especially with the debtors coming in a fixed number of days with under bank LC. So let's see how the things are unfolding, but there is definitely going to be my personal take would be that the working capital will improve in this scenario once this happens. Yeah. Okay. So that is and on the other side we have already the consumer business, which is really going to with that, and I think if these two combine, definitely maybe in 1 to 2 years, once the smart meters are unfolding in a bigger way, we might see a good drastic correction in the working capital cycle of the company.
Yeah, that's great. And lastly, sir, our return on equity is in the mid-single digits. When do you see that approaching double digits?
Look, I will not be able to give a specific time schedule on that or something, but if you see all the steps what the company is doing, we do see the growth coming in. We do see certain margin improvement. In fact, once the smart meters are in the middle of their implementation, we may see an upward correction on the margin, especially on the smart meters. The EBIT margin is set to go up. In terms of the balance sheet, where our teams have already, we are very conscious and specifically working on improving our working capital cycle or other ratios. So I think as we see this better capacity utilization coming in and the volumes to kick in, definitely I think we would be able to see better return on equity. But right now, to give a specific time, I think we have a slightly longer way to go on that. But definitely the direction I would say is right. We are moving in that direction, but no specific schedule I could give you on that. Yeah.
So from a longer term perspective, say 3 to 5 year kind of a perspective, what kind of sustainable return on equity do you think this business can achieve?
I think we can probably, I think we should be, I think I can give you we can probably get back. I think definitely we do look at least a double digit return on that. But there's something which I think with the new way we see the opportunities coming in, definitely we are conscious on the ratios and the kind of wealth creation or the the returns to the stakeholders need to come in, and that is something what we are doing it. But I think it will be a little early to comment, but yes, probably in the next 1 or 2 quarters we'll start being more specific on that. Yeah, but if you still have any specific thing you would like to connect with us, I think through the IR you can do that, and we'll be happy to take your questions on this.
Thank you, sir. Thanks for answering my question.
Yeah, thank you.
Thank you. We have the next question from the line of Abhijit Sinha from PI Square Investments. Please go ahead.
Good evening, sir. So during the call, you mentioned quite a bit of times that we're looking to improve the margins, right? Is that by reducing our debt that we have? Because it's quite substantial. Because we don't have any capex plans ahead, for the time being at least. So yes. Do we reduce the debt?
Yeah, if you see, in terms of our net debt, almost I think 85% of it is all working capital related. Correct. And our term loan debt is pretty less, and that's anyway year on year is getting paid. So it's not something substantial on that. The main debt is all related to the working capital. So right now, if you see in the 6 months also, we have our gross debt we have at the same levels, although there's a 46% growth. Internally, what we are looking at is that at least on the same debt we are able to maintain a good growth. So overall, as a ratio, we come down, and the major part of our business currently, especially the metering part, is all to the utility. So that does involve a high working capital cycle. So right now we don't see any change in that, but I think if you should have just heard the last answer what I was giving. with the new system coming in place of the AMI SPs, definitely in future we may see certain long-term corrections happening on the debtors for the on the utility side, because the supply would be through a AMI SP, and that
our requirement will come down completely for the working capital.
On a fixed, let's say once we are supplying to them on a fixed date through the bank LC, we are getting the funds in our bank, so that will help us. And on the consumer side, anyway, the implementation of the channel financing is happening, so that will keep, we should see that anyway improving, but that will always take time, but that's happening continuously. Quarter on quarter, we are seeing the implementation go high. Internally, we have kept a target that at least maybe 70% of our consumer electrical business, we need to get it under channel financing. And once those figures start kicking in, definitely we will see drastic changes on the balance sheet here.
Perfect, sir. And in terms of stability, in terms of our revenue, do we how through each and every quarter, is it a stable revenue stream that we expect, because it's a very government order based structure that we have in terms of revenue coming in?
So generally, if you see, the sales have been moving based on certain trends. Right now, normally the first quarter is a little low, but this year we had a good quarter as a first quarter also, and I think followed by a second quarter. But so there is nothing like the trade business. Generally, the B2C business is much more consistent in terms of the orders and the payments coming in, or even the billing happening. But then they have their highs and lows. Like the fourth quarter is definitely the strongest quarter. The first quarter is slightly the weaker quarter among the whole year. But this is how it works. In terms of metering with the government, I don't think they follow any cycle like that. But yes, the tenders coming out and the finalizations, they have their own time lags and other things. Right now, the sheer inquiries are at a very high level, that from now onwards, at least the next 12 to 18 months, we will see a very strong order flow coming in, and thereafter the executions happening. But because many of these orders now which are coming are more consolidated with their requirements of at least 2 to 3 years, even if not more. So the order booking in the industry is going to rise very high in the next 1 to 2 years, and thereafter we will see much more steadier incomes coming in, and certain incomes are also related on a little long-term basis, on recurring incomes happening in a particular project. So that may also continue here.
That's quite interesting to know. As you mentioned that our Q1 numbers were quite strong when it's supposed to be a weak quarter generally. This quarter was really strong. So then do we expect the similar strength respectively in every quarter? Or is it just a one-off quarter that we have seen?
If you look at the next half, definitely we look at this volume of business to be repeated, plus maybe a little more growth. Hopefully we should do it. But at least the business what we have done in the first half, like we have been talking about a double-digit growth, at least a little higher double-digit growth this year. And I think anywhere between a 20% growth is something what we are looking at. And I think we kept it as a target. We did give a guidance for that, and I think we are going as per that. So luckily, or I think with the efforts of the team, the first half has been good. I think the second half is also going to be much better than that. And the fourth quarter, definitely the trade also gets a bigger upside, in terms of this thing. So I think overall as a year, we should end up with a good 20% growth. Plus, we also look at a good order book at the end of the current year, so that even the outlook for the next year is going to remain equally strong, for sure.
So this 300 mark is something that is sustainable for us, right? So when I'm talking about my exports, that is supposed to be remaining at this 50 crore level mark only, right? It will remain at that space only, roughly?
No, currently if you see, we are only since the last 2 years we have seen the export go up. In fact, almost from a 20 crore in 2 years, it's gone up to 50 crores. Of course, the base is very low, so that's how it is. But this year we are already seeing nearly a 20% growth. I think the second half also we should see a similar or a little higher growth than this. So overall, we are moving up on the exports, and but our penetration is currently in about 42 countries, and I think that kind of a thing we see to continue. Yeah.
This would be what region primarily, sir?
Sorry, for?
What region would this, when you mentioned 42 countries, what region is where our maximum exports happen on a regular basis?
So we are supplying to a couple of countries in Africa, then in Middle East and Gulf, again we are present there. We are present in Southeast Asia, at least in 5 to 7 countries over there. Then we are in entire SAARC, and then we are doing UK and 1 or 2 countries in Europe. Now the idea is, the way we are seeing, we are quite upbeat on the growth in exports in the international business, primarily because of the certifications and the compliance to the specifications what we have to the IEC standards. So just to put it in simple words, we have been in the Indian market for very long, and our products even selling in India are based on international specifications. So the moment we have started going out to various countries, we have seen a very good response, and that has converted into sales coming up. But only, I would say, currently what is happening is there are 5-7 countries where which have seen very high, the forex ratios have really turned upside down. The inflations are very high. Even good countries like Turkey, or we've seen even Sri Lanka close down, which was also a market. So some of these things are now based on the economies and the geopolitical things. These are happening. But nevertheless, even keeping these aside, we still would see at least a 20% growth this year. And even going forward, we definitely see a good growth in the exports. Yeah.
Because on the other hand, just like our country, right, there will be other countries also using the old meters and now trying to move to a more advanced electric meter, that way, smart meters that we do provide, right? Last question, sir, is that let's say our metering business, right? If we even touch the 500 crore mark this year, we would still be behind the 2019 numbers. So do we think that by 24 we will be back into those 19 numbers, or much more than that, or what would be the route, sir?
No, I think I don't know how you got the 500 crores from, but our 6 months current, we have done almost over 300 crores already. So we would see the overall figure to be well over 600 crores. That is where we see the metering business to come in. So I think that should be somewhere equal. I do not recall the year and the sales you are looking at, but I think about 600 crores.
600 is the 2019 number, same. Yeah.
Yeah, but we are looking at a 600 crore plus, at least in the metering front, and the others also are almost equally. That should be done. Yeah.
Exactly. So this is a product that we are very strong on. Like, I think a lot of demand is coming in there. So when I'm talking about switchgears also and our wires and all, do we expect similar growth over there, or it would grow but less than the metering products?
No, if you look at this, like if you look at compare the specific quarter or the half, last year with the lockdowns happening, the metering business had gone down. So there could be some the percentages like this, but going forward, I think we would see the growth across both of them, frankly. But as I said earlier, also the consumer and industrial will see a much more steady growth across quarter on quarter, and that would go on. In meters, we may see a couple of quarters being really spiked up because the order flow, even the dispatch instructions, what we get from the utilities, the dispatch schedule. So it depends a lot on that. And since that is, we are dealing with the government, so that those have to be respected. Those kind of schedules have to be respected. But generally, both are on the upside, and I think that is where. But over a period, if depending on the orders, the meter may see a exceptional growth maybe in the next 2 to 3 years. Definitely, that is a big possibility. Yeah. But right now, I cannot quantify it, or I cannot place a number on that. Yeah.
But is there any certain targets that we have in the next 4 or 5 years that this is where we want to reach? Like for
yes, of course we have that. I would sometimes if you look at in meters, the numbers are pretty mind-boggling. What the requirements are there, and so giving a number may sound too, sometimes it may sound unrealistic of us putting a figure for that. But definitely, if you see, you can yourself see that the general tenders which were in the market normally at 800 or 1,000 crores or 1,500 crores today are well over 10,000 crores. And I think if in next 6 months, if you look at the inquiries, they could even be well more than 15 or 20,000 crores. So definitely the upside is there. But again, as I said, it may be very difficult to predict an upside or keep a target based on that. The tenders are there, huge tenders are there. We are participating. We are well qualified. We may get it, we may not get it. There can be many factors, price being one of them, but there could be many things. So it will be hard to predict. But yes, definitely the company is geared up for that. We are looking at a good market share. But as and when the flow of orders are coming, we will keep revising the guidelines or our guidance to the market. But definitely we do hope a very big upside can happen and a complete different scenario may appear in the next 1 to 2 years, especially on the meters.
Provide order book numbers?
Yes, our order book is, I think it's about 830 crores plus, and out of that, about 504 crores, I think, are meters right now. So the meter pendencies are also at a good level, execution is at a good level. So definitely, I think we should see some good numbers coming
And
out.
our average execution period would be how long, sir?
Depends, if you see the current orders which have been coming out from the utilities directly, that the executions are typically around 9 months, like 1 to 2 months of waiting, like getting preparation done and then executing in about 5 to 6 months. The new orders, what we will see through the AMI SPs, they are the period of implementation. The values will go up, but the period of implementation may be 18 months, it could be even 2 years. That depends, actually it depends. It depends on state to state, it depends on the requirements. So it's very difficult to just give a general figure. I would be wrong in doing that actually.
But at least that would reduce our, though it will be a longer period, it will reduce our working capital requirements and everything at one
That
go.
should happen because, as I said, that would be supplies to a private company, large company typically, and who would in turn, hand over the project to the government. So that definitely we would see certain changes in the working capital cycle and the debtor days. So hopefully it should be for the better. Let's pray on that.
Sir, assuming if we can sustain this growth that we are having right now, in the next 4 to 5 years we can easily touch the 2000 mark, right? Is that fair enough to say that, or
no, as a company, as a company or as metering?
As a company, a 2000 crore company.
No, I think I would say, even if you see a good amount of growth coming in, I think that would happen well before that for the 2000 crores. Yes, I think there I could give a guidance on just a rough guidance from my side, but that can happen much before that also. Maybe in the next 2 to 3 years, we hope that can happen. But what I was talking about is that sometimes there could be much more substantial increase because of the volume of orders which are coming in. But for that will require a much more deeper planning, the way because that is the business would get positively changed based on the enormous demand coming in. Yeah. But otherwise, the way we are seeing the growth in the next 3 years, I think that should ideally happen. Yeah.
True, sir. Because you've got a direct, you can see the order books increasing on a direct basis, right? So that's why you will have a better view on that. And sir, just a little question that I had, in our shareholding pattern, right? I think people might have asked this before. Our promoter companies have the name Havells in it, right? So have you ever considered of changing that name to just remove any controversy so that institutions can, start being more convinced in us as a company itself and not be like, why would they have Havells in their name and all that stuff?
No, frankly, I've not understood the whole question completely. But these promoter companies, they are our promoter companies, and I don't see any reason. Since our promoter company, one of the promoter companies is 1956. and I think that is where the name and our legacy of being into switchgear and into meters is coming right through from those companies. So I don't think.
So you don't think there is any confusion that gets created?
There is frankly no confusion in the market for that. So we are, as HPL Group, our promoter companies are there, and I frankly am not understood. But frankly, like any of us, I don't think we would. Sorry.
No, sir. If you're comfortable with that, then why should I have a problem?
Yeah, but probably I was just saying in a lighter tone that probably I will not change my father's name. Why would I do that? I can change my name, but
your company has its own legacy, to be honest.
Yes,
but
yes. We have the legacy, and we are well within the law and our rights to use that. Yeah, so there's nothing like that.
I was just wondering because sometimes in the market there's a lot of confusion that is that the same habit? I think it's a really age-old question that you guys have been facing. So I mean, if there's the legacy,
I don't know. Maybe that could be a personal opinion, but we are not facing anything like that. I don't think.
All right. Perfect.
Anyway, probably I will not comment on that on this forum. But yes, I don't think there's any confusion from anybody's side in that. Yeah. So anyway, thanks a lot. Yeah. Thank you.
Yeah.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Harshit Kapadia for closing comments.
Thank you, Michelle. We would like to thank Gautam sir for being part of the conference and part of the call, and we would also like all investors and analysts for part of the call. Any closing comments, Gautam sir, you would want to share with investors?
No, I'll just I'd like to thank everyone for coming and joining on this call. And in case of any queries or any further information, they may contact the Dickenson World or us directly, and we'll be happy to answer them on that. So I wish you all a great evening, and we can now close the call there. Thank you very much.
Thank you, sir.
Thanks.
On behalf of Elara Securities Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.